Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we're here with Chris Reese. Chris Reese, CFA, has been chairman and CEO of MJ REIT since its founding. Prior, he was a managing director of ArcView Capital. Prior to joining ArcView Capital, he spent 9 years at FS Investments. Chris earned his BS in Finance from Drexel and his MBA from Villanova. So thank you Chris for being here. Today we're talking about state legal cannabis businesses and your real estate activity. So, for investors in the commercial real estate sector, it's I always thought it was kind of interesting from an operational perspective because you have to understand the operating business that's on the real estate or that's in the real estate if it's commercial building. So, can you talk a little bit about how you look at these businesses from an operational perspective for your investors?
Yeah, sure. And first, Rob, thanks for having me. Pleasure to be here. The cannabis business is one that's been growing tremendously, as most of us know. Some of us read more about it because we're in the industry, but the way we approach it, and specifically to your question, is we really look at the real estate side of the investment. And of course, with any real estate purchase or even underwriting a mortgage on a piece of property, you want to make sure that you have a good operator or a good tenant that can, number one, pay you back. Really, that's the most important. And within the cannabis space, it's interesting because we generally try to find or seek to find operators that are good managers. Right, good management teams that have been in place, even though they may be in the cannabis space a little bit shorter, they generally have longer dated track records doing other type of business activities because we're lending or doing a transaction, not with we are doing it with a piece of property, but at the end of the day, it's really with an individual person. And so, what's the caliber of that person? How long have they been in the business? What do their colors look like when times get tough? And so we'll go back and look at the management team's track record. We'll look at the operator's longer dated track record, whether it's in cannabis or outside of cannabis. Ultimately, come up with the notion that we want to partner with individuals that are high caliber. Okay. And ultimately, if times get tough, what is it that they're going to do?
Okay. And do those folks have a particular sort of set of experiences in, say, retail, or is it food and services? And, what is it that they do before this that you can compare?
What's interesting, because we'll generally focus on two areas of the market. One is on the industrial side, which would encompass a cultivation site. Right. And secondarily, on the dispensary side. So think of the retail real estate. And each one of those operators may have a little bit or slightly different background. For example, in the industrial side, has the operator, do they have experience with indoor grow, for example? When you create and you build out an indoor grow facility, it can be lab grade technology. So you have your HVAC system, your irrigation, your lighting. So what's their experience in building out whether it's a greenhouse or an indoor grow space where maybe they've historically had some experience in growing other agricultural products inside. Mm-hmm. So that's what we look at. And then on the dispensary side, thinking of, again, retail, what is their experience in the retail space? So have they, and most of the times they have operated some other type of business. And most of the time, they do have prior experience within the cannabis space as well. So it's a good overlap between the two areas, but you really want to make sure that those experiences kind of come through. And ultimately, as we look at each individual deal, our ultimate goal is to underwrite on a conservative basis to help protect our investors along the way.
Okay. And in analyzing those short-term experiences, you mentioned earlier that you look at when things were tough. Things haven't been tough in a while in the U.S. because of helicopter money, low rates, all the other stuff that everyone knows about already. Yeah. I've been saying we're a late cycle for 7 years or something. Yeah. So how far back do you have to look to find something was tough?
Well, I think when you go back, times were, I guess I would back up and say, if you start on the debt versus the equity side. So right now we have a pretty tough time in the public equity market on the cannabis side. So depending upon what company you're looking at, you could have lost 90% of your money. So over the last few years, and that's been tough because when you go out, the general sentiment with cannabis related investors are that they're somewhat reluctant to get back into the space because they were, and they lost a lot of money.
Right.
So we approach it a little bit differently and focus more on the debt side, because over time, ultimately through cycles, we believe that hard assets will win the day. And we'll either underwrite a senior mortgage, or we'll do a sale leaseback transaction and kind of own that property and lease it back to the operator for an extended period of time. For us, we believe ultimately that will prove more beneficial and more stable to our investors longer term. Now, going back to when times were hard, you think about where rates were. When we were underwriting our first deals, MJ REIT's been in business now for 15 months. So we were underwriting, providing senior mortgages at about 12% on the fixed rate.
Right.
All of a sudden, rates ballooned from the Fed increasing short-term rates. Now most of our loans are variable, and some of them have ceilings as high as 18%.
Okay.
Currently, the most recent deal, we put money out at around 15%, 15.5%. Okay. So it's a different environment, and I think for us, what's been somewhat unique is that we have no legacy borrowers that we lent money to at 6%. Now all of a sudden they're paying 15%. So,
right. Yeah, because the great thing about the relatively high pricing is the interest rate impact was not as big. Right?
Exactly. Yeah. That's exactly right.
Yeah, and that sounds like a pretty good premium when compared to what I think of as most commercial real estate subsectors.
Oh yeah,
particularly industrial.
Yeah, it's interesting because this kind of gets back to the entire cannabis structure overall, and that is that cannabis is still a Schedule I narcotic.
Yes.
Still illegal on the federal level, and there's some recommendation to the DEA to reschedule that to a Schedule III.
Right.
And we do believe that will occur in 2024, probably in the first quarter of 2024. Okay. And the big benefit with that, right now, if you're a coffee shop, you can deduct your ordinary expenses.
Yes.
If you're a dispensary, you can't.
Right.
And so that makes your effective tax rate in some instances north of 70%. So it's really, really difficult to earn a profit.
Well, yeah, and this makes your job more difficult as well, obviously, from an underwriting perspective.
Of course.
There are a couple other factors I'm curious how you kind of get your arms around from underwriting. There's the federal issue. Mm-hmm. There still remains some banking issues, although I think some of that has been solved by some, non-banks or, non-GSIB banks. And then there's the gap between the pricing of the official market and the illicit market.
Right.
So how do you get your arms around that? You're CFA, right? So
right.
How do you get your arms around that from this perspective?
So I guess a couple points I would raise. When you think about the pricing of the market overall, take, for example, New York. In the city of New York. So right now in the city, last time I checked, we had 6 legal dispensaries and anywhere between 1,500 to 8,000 illegal dispensaries. Oh, okay. So when you walk down the street of New York, you smell cannabis. You see a pot shop on every corner, and it's tough to regulate because as soon as you shut one down, somebody else opens it up in the same spot.
Right.
And so from that standpoint, really understanding the real estate that you're getting into from our side is extremely important, and then just being able to work with the borrower to ultimately generate the best outcome, because ultimately we want repeat borrowers as we continue to move forward.
Sure.
And what was the second part of
talking about how you get comfortable with the banking issues that remain.
And so last time I checked, we had about 600 plus banks that will take money from dispensaries or cannabis shops. So they're willing to accept your deposits, but what they're not willing to do is provide that collateral or make a loan to you.
Right, which is part of why the borrowing is so expensive for them.
Exactly. And so for us, it's this void of capital in the market that creates the opportunity for our investors.
Right.
And believe me, at some point when either cannabis is rescheduled or some of the larger players come into the market, which will eventually happen, you'll get some yield compression. And instead of me lending at 15%, that comes down to 10, 12%. But on the flip side, we as well have a difficult time finding leverage on the fund. So the fund has zero leverage. And while we might put money out at lower rates, we may be able to lever the fund 0.5 to 1. Right. I know there's some other real estate funds in the marketplace that are levered 2 or 3 times. So, going up a little bit in the leverage, I think we could maintain our targeted return for our investors.
Interesting. So the two things you do to sort of dig into the things you do here are sort of traditional first lien mortgages.
Right.
And you mentioned earlier sale leasebacks.
Yeah.
How do you find the right fit for those within this whole range of the different types of subsectors here, from industrial to retail, et cetera?
Well, it's interesting too, because we talked about the federal level and how cannabis is still illegal at the federal level. Mm-hmm. It's legal today on at least a medicinal value in 40 states, DC, and a couple of U.S. territories. So every one of those states have different rules and regulations. So you really have to have kind of boots on the ground and have a good understanding of each individual state. Take, for example, some of the more mature states like California. In California, there are 56% of the counties in California have banned cannabis. They don't allow any cannabis sales. But yet, cannabis is one of the biggest growing products in the state of California. Now, some of those counties, many other lenders might look at the state overall and say it's saturated because it's a mature market.
Right.
Where we've gone into a couple of pockets of areas within California, uncovered attractive real estate valuations in an area that we know we could find another operator if our current operator failed.
Oh, okay.
And so you really want to kind of pick and choose your battles, because you have 40 states to go into, and DC, as I mentioned. So you're looking around at a couple of opportunities. So one is good real estate valuation,
right,
and then secondly is the operator. And we approach every situation assuming that cannabis goes away. So we underwrite at what's referred to as a non-cannabis valuation.
Okay.
So we step in and we say, okay, let's provide our senior mortgage on this, dispensary or cultivation.
Right.
But then our thesis is, okay, cannabis goes away. What can I bring a cucumber or strawberry farmer into the cultivation?
Right.
Or a coffee shop into the dispensary? And what's the true value of that building?
Okay.
And so we're conservative in our underwriting, but we're also very focused on areas of the country where we could maintain our real estate valuation.
Okay, and that must be relatively doable right now, because there is you must be getting some good valuations someplace, because there's not a dearth of pricing information about commercial real estate as a whole right now.
Yeah, exactly.
And there's a lot of vacancy.
Yeah, there's a lot of vacancy, and I would even go so far as to say there's no shortage of deals. There's a shortage of good deals.
Yes,
right, and that's from a due diligence standpoint, it's really. It's being a detective, right? Yeah. You want to make sure that you uncover everything you can before doing the transaction, because once the transaction's done, it's and you discover something that you missed in your diligence, that could be difficult recovery. So you want to make sure that you really spend your time up front, doing all the homework, making sure that you kick the tires. Of course, you're visiting the sites. You're getting accurate comps from neighboring properties and sales that have occurred. And then with the notion that what could go wrong, and then what could go wrong, how do you recover? Like, what's the worst case scenario, and how do you make sure that you come out whole?
Right. So from your REIT's perspective, how do you handle that? Because that sounds like a massive amount of due diligence.
Yeah, it's a lot.
I don't know how many people you are, but
yeah. Well, the good news, Rob, it's more than just me. So we actually hired a firm here in the city called Rainbow Realty Group. They're an affiliate of Gould Investors, which is a large multi-generational family here in the city. They've been in the real estate space for 65 years.
Sure.
They manage 2 publicly traded REITs, and they have 3 cannabis institutional funds.
Okay.
And their overall kind of real estate assets are about $2.5 billion.
Okay.
So they have a fully built out back office. There's a team of diligence experts that will go out, create, find the deals. And when you think about finding deals, I mentioned the amount of deals that are out there. It's really, in this space, there's a lack of capital, as we talked about, and you can be very selective on those deals. Mm-hmm. At some point when there's more money that comes into the market, deals will more of those deals will get funded, and it'll be a little bit more difficult to find those deals. But it really falls on the relationships that you have in the market. And ultimately, we want to partner with companies that will repeat business. And the mortgages that we underwrite generally are 2 to 4 years in nature.
Oh, okay.
And so they're fairly short term. The fund today, the average weighted maturity is just over 2 years, 2.1 years in the fund.
Okay.
So it's short in nature, and we want to be able to work with you, have a successful transaction, and ultimately, do additional business as you continue to grow your business.
Okay. Well, I mean, this is all fascinating. I mean, it's, regardless of how investors might feel about cannabis or et cetera, those are pretty attractive margins, right?
They are.
It's an exceptionally interesting sort of business, and something thank you for, because I think most of the people or CFAs who are listening to this don't know a lot about it.
Yeah. Well, I would just add one additional point. When you think about the market, and I've been around for about 28 years in asset management, and you can occasionally find areas of the market that you see a void of capital. And when you find those, you can generally earn higher rates of return for your investors.
For sure.
In the cannabis space is somewhat unique because it's one of the fastest growing areas of the U.S. economy.
Right.
And it's doing so without capital. And the interesting point, which I think is the kind of most relevant to this market today, is very seldom can you find those characteristics where accredited or high net worth individuals can get in before your institutional players.
Right.
So that will change over time. And I look at this as a fantastic opportunity for high net worth individuals, accredited investors, to take advantage before the big guys get in.
Interesting. Well, yeah, so I mean, there's a lot we could get into here, but I don't want to scoop a little bit too much, because Chris, you're going to be speaking at our event on February 1st.
Yes.
Here at CFA New York, called Cannabis 101, Public to Private and Everything in Between. So I hope, the people who are listening to this, if you're interested in this, if you have questions for Chris, sign up for that event right now. It's on our website. You can go in and sign up from wherever you are on your phone or whatever have you. Hopefully this gives you all some idea of how to, some other questions for Chris and the rest of the panel. So thank you, Chris, for being here.
My pleasure. Thank you, Rob.
And thank you all for listening. Until next time, this has been Compound Insights, and I'm your host, Rob Rowan.